Hello viewers, welcome to my channel. I am Hashim Ali Khan. So presently I am giving the lectures on the subject Income Tax 1 in this subject for the assessment year 2020-21. So last 2-3 videos I have prepared on the introduction, basic provisions of Income Tax Act regarding how to compute the tax liability of a person. So these videos are very important, starting beginning introduction, because without understanding this introduction to Income Tax Act, we cannot go and compute the tax liability. We cannot go and calculate the total income under different heads. So these are the basic fundamental foundation lectures. So don't skip the video in between, so watch that till the end. Then only confidently you can enjoy the problems on computing the total income, computing the income under different heads. So all the problems are based on these provisions. So already I have uploaded 3-4 videos on the introduction. In this video I am going to explain. So if you are first time on my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects, different topics. Select the video, watch the video, and you will get a lot of knowledge from these videos. Now I'm going to start the next topic of this introduction to Income Tax Act 1961. Exceptions to the general rule. The general rule is the income earned during the previous year is taxable in the assessment year. So whatever income earned during the previous year is taxed in assessment year. That is the normal rule, general rule. For example, our current assessment year is 2021. 2021 is the current assessment year. The previous year is 1920. 2019-2020. The income earned during 1920 is taxed in 2021. तो जो income previous year में earn करेंगे उसका tax assessment year में होगा. So this is the normal rule, right? But there are some exceptions. What are the exceptions? Exceptions means the income earned during the previous year is taxed in the previous year itself. The income is not taxed in assessment year. Same year, the year in which the income is earned, in the same year it has to be paid the tax. These are called exceptions to the general rule. So what are the exceptions? First one, persons leaving India with an intention not to return to India during the relevant assessment year. If the Income Tax Act comes to know, either by themselves or by some other person, that a particular SSC is leaving India, is going out of India with an intention not to return back during the assessment year. Normally, the people will leave India for a job, for a particular employment purpose. So normally when a person is leaving India for employment purpose, he will not frequently visit India. He will go India for a long time, for a long period of time. In that case, the assessment, Income Tax Act provision says, whatever income he has earned during the previous year, he has to pay the tax in the same year itself. Because he is leaving India, he is going out of India with an intention not to come back. If the intention is he is going only for tourist purpose, for picnic purpose, then normally he will come back within 1 month or 2 months. In that case, this provision will not apply. Second one, income of non-resident shipping companies. There are many shipping companies located in different countries. The ships will transport the passengers or goods, cargo from one country to another country. So if a shipping company does not have a representative in India, does not have an office in India, in that case Income Tax Act says the master of the ship, the manager, the owner of the ship has to pay the tax on the income earned from India on carrying the passengers or cargo, and they have to pay the tax here itself before leaving the ship. Before leaving the ship, they have to clear the tax liability if they does not have any representative in India. Next, incomes of discontinued business. If a person discontinues the business in the previous year itself, that means the business is finished during the previous year, then Income Tax Act says don't wait till the assessment year. When your business is finished during the previous year itself you have to pay the tax. Then persons transferring the assets to avoid the tax. If Income Tax Department comes to know that a person is transferring the asset mainly to avoid the tax, The intention is to avoid the tax. In that case, income tax department says they have to pay the tax immediately on transferring the asset. Don't wait till the assessment year. Last one, incomes of bodies association formed for short duration. Sometimes an association or a temporary partnership is formed mainly to complete a venture. As soon as the venture is completed, the partnership business is finished. So it is called a temporary association. If income is earned by a temporary association, then they have to pay the tax in the same year in which they have earned. They should not pay the tax in the assessment year. They should not wait till the assessment year. So these are the exceptions to the general rule. General rule is income earned during previous year is taxed in assessment year. But in these cases, the income earned in the previous year is taxed in the same previous year, not in the assessment year. Next one is incomes exempted from tax. See here, there are many incomes which are specifically exempted from tax. In examination, you may be asked a question like, give some 5 examples of incomes which are fully exempted from tax, or give some 10 examples of incomes which are fully exempted from tax. If you refer the textbook, there are many examples given, nearly 40 to 50 examples are given, those incomes which are fully exempted from tax. But here I am going to explain you a few examples of incomes which are exempted under section 10. So section 10 of the Income Tax Act 1961 deals with the exempted incomes. These incomes are fully exempted, so it will not be considered while calculating the total income. It is completely tax free. So what are the examples? Here the examples are, first one, receipt by a member of HUF. A Hindu undivided family, it's a peculiar form of business found in India. So in this Hindu undivided family, the head of the family, Karta, he will manage the ancestral property. The business is coming from ancestors. The head of the family is called the Karta and the other members are called co-partners. Co-partners. So the Karta has to pay the tax of HUF. So after paying the tax, the income of HUF will be distributed between the co-partners. When co-partners receive the income of HUF, it is not taxable in the hands of co-partners. The HUF will pay the tax. The Karta will pay the tax on behalf of HUF. But co-partner, they will not have to pay the tax on the share of income which they receive from HUF. Similarly, gift received on the occasion of marriage day or birthday. So personal gift. When personal gifts are received on a wedding anniversary or marriage or birthdays, these are not taxable. Allowances given and perquisites provided to government employees who are posted abroad. Normally embassies are located in different other countries. Indian embassies are located in other countries. So the employees working in Indian embassy abroad are appointed by the government of India. So government of India will pay the allowances, perquisites to those employees who are posted abroad. So allowances and perquisites received by employees who are posted abroad is fully exempted from tax. Then payment received by an employee of state government or central government organized sector on voluntary retirement is exempted up to 5. An employee of a state government or central government or an organized sector has given voluntary retirement. At the time of voluntary retirement, he got a benefit of an amount of rupees. So Income Tax Act says up to 5 lakh rupees exempted on voluntary retirement received by government employee or central government employee, state government employee or organized sector employee. Then payment from RPF, recognized provident fund. So when a person receives the amount from RPF, recognized provident fund, it is fully exempted. Scholarship received by students, then allowances received by MPs and MLAs, member of parliament or member of state legislature, assemblies. So the member MPs and MLAs, the allowances received are fully exempted. Interest received on securities which are exempted from tax. Income Tax Act has given a list of securities and specified that interest on these securities are fully exempted. So the interest on exempted security is also fully exempted. Agricultural income. According to section 10 subsection 1, agricultural income earned in India is fully taxable. Already in the previous video I have explained in detail regarding agricultural income. Next, gratuity received by government employee is fully exempted. Gratuity received by government employee. Then dividend received from Indian companies and income from mutual funds. The dividend received from Indian companies and income received from units of mutual funds, fully exempted. Next, interest on NRE account, non-resident external account. So NRE account, the interest earned on NRE account is exempted. Income received from UTI and other mutual funds. Unit Trust of India. The income received from Unit Trust of India or other mutual fund exempted. Lastly, allowances received by judges of Supreme Court and High Court. The allowances received by judges of Supreme Court and High Court are fully exempted. Just an example, I have given these 14 examples. Apart from that, so many other examples are also there. So just you have to keep in mind, if in examination, if they ask you, give some examples of incomes which are fully exempted, you have to remember at least these examples. Now, very important topic I am going to start now is residential status. Residential status. For determining the residential status, the persons have been classified. See, the income of a person, the income earned during the previous year is taxable in the assessment year. Now, the question arises, what is the scope of income? That means which income is included, which income cannot be included. The scope of income depends on the residential status. The income tax does not depend on citizenship. The citizenship of a person will be decided by the constitution, but residential status is decided by the Income Tax Act 1961. So citizenship has nothing to do with the Income Tax Act. Income Tax Act will not say that only Indian citizens have to pay the tax, foreigners they are not required to pay the tax. It is not like that. It is not like that. Even many cases what will happen, Indian citizen of India may be exempted, whereas foreigner is paying the tax. It may happen because the residential status will be decided by Income Tax Act. A person may have the income from India, may have the income from outside India. Then the question will arise, which income is taxable? Indian income is taxable or foreign income is taxable? So generally we can say a broad rule, a rough crude rule is, for resident person, global income is taxable. For resident person, if a person is resident and ordinarily resident in India, his global income is taxable. That means income earned throughout the world. For example, a person Mr. X, he is resident in India for the last 25 years. 25 साल से कभी इंडिया के बाहर गया ही नहीं हो, but he is having the income, Indian income as well as foreign income. अब उसके नाम पे income generate हो रही है, Indian income, foreign income. The Income Tax Act says you have to pay the tax on all the incomes which you have earned in India and abroad, because you are an ordinary resident person. If a person is non-resident, how it is decided, I'll explain you. So if a person is a non-resident, he is liable to pay tax only on Indian income. The foreign income, he is not liable to pay tax in India. So this is a crude, broad rule. Now we'll go in detail how to find out the residential status of a person. Now remember, it is not necessary that once a residential status is determined, it is okay, it is over. Every year the same status will continue. No, the status may change every year. So residential status have to be determined for every previous year. It may happen in 1 year a person may be resident, next year he may be non-resident, because he may be moving from one country to another country. So as he moves away from India to other foreign countries and coming back to India, his residential status may change. So residential status have to be calculated for every previous year. Now, for determining the residential status, and the provisions regarding this residential status are given in the Income Tax Act. For determining the residential status, the persons have been classified. So how to determine the residential status of a person? We have different types of persons. The first one, individual. Separate rules are there how to find out the residential status of individual. Then residential status of Hindu undivided family, HUF, because HUF is also one of the person. So how to find out residential status of HUF? Here it is given. Then firms or association of persons, partnership firm. or a group of persons. How to find out the residential status of group of persons. Then companies, joint stock company. So how to find out the residential status of joint stock company? Every other person means apart from all the first four, any person will come in this every other person. The Income Tax Act has the provisions regarding how to find out the residential status of different persons. One by one we have to take up. First of all, individual. Elaborate provisions are given, huge provisions are given how to find out the residential status of individual. For individual, we have three different status. The three status are resident and ordinarily resident, first status. Second, resident but not ordinarily resident. And third one, non-resident. तो कोई भी अगर इंडिविजुअल है तो उन्हें तीन में से कोई भी एक हो सकता. He may be ordinary resident, he may be not ordinary resident, or he may be a non-resident. Now conditions. In order to determine the residential status, we have two sets of conditions. Basic condition and additional conditions. Two sets of conditions are given. By applying these sets of conditions, we determine his residential status. Now what are the steps here? Remember, two basic conditions are given. I'll explain you in detail. Two basic conditions and two additional conditions are given. So first of all, steps. The first step is if he satisfies one or both the basic condition, then he will be called resident. Concentrate here. If you have concentrated, if you understood this provision, there won't be any difficulty while solving the problem. In the coming videos, I am going to solve the problem on calculating, on finding residential status. First of all, I am explaining about individual. So what are the steps? First, if he satisfies, if an individual satisfies one or both, two basic conditions are given. I'll explain you what are the two basic conditions. Two basic conditions are given. If an assessee satisfies one or both conditions, he will be called resident. He will be called resident. Second, if a person fails to satisfy any of the basic condition, he will be a non-resident. If a person cannot be able to satisfy first basic condition and also second basic condition, he will be called non-resident. Second condition. Third, if a person is resident, then we have to check the additional conditions. Test the additional conditions. So, first of all, we have to see the basic condition. If a person satisfies one or both the basic condition, he will be called resident. If a person does not satisfy any basic condition, he will be non-resident. So, if a person is a resident, first step, resident, then we have to check whether he is an ordinary resident or not ordinarily resident. For that purpose, two basic conditions are given. So here, if a person satisfies both the additional conditions, then he will be treated as resident and ordinary resident. So first of all, we have to check the basic condition. If a person satisfies one or both the basic condition, he will be called resident. If he is a resident, we'll go to additional conditions. If a person satisfies both the additional conditions, he will be called resident and ordinary resident. Resident and ordinary resident. If a person satisfies none or only one condition, then he will be treated as resident but not ordinary resident. That means if a person has satisfies one basic condition or both basic condition, he will be called resident. After resident, we have to go the additional conditions. If he satisfies both additional conditions, he will be a resident and ordinary resident. If he satisfies only one or none, then he will be called resident but not ordinarily resident person. Resident but not ordinary resident person. Then special category. One special category is there. To this special category, only first basic condition will apply. The second basic condition will not apply. Special category. Which is the special category? Three cases are given. The first case, an Indian citizen left to a foreign country. An Indian citizen, origin India, but he is leaving for a foreign country, leaving to a foreign country for job purpose, for employment purpose. Then he is called a special category person. A person of Indian origin leaving India for employment or job purpose. Then second one, an Indian origin or a person of Indian origin came to India. Indian citizen or origin of India came to India on visit. For example, Mr. X is working abroad on employment basis. During the current previous year, he came to India on visit for few months. After few months, again he has to go back to foreign country. This is a special category. First category, Indian origin going abroad on employment. Second, Indian origin but coming to India on visit. And third case, citizen of India who left in crew in the ship or in case of aeroplanes. So crew member, whether in ship or aeroplane, right? These Indian citizen persons who are crew members in aeroplane or ship, they will be categorized as special category. In case of special category of persons, only the provisions of first basic condition will apply. What are the basic conditions? In the next video, I am going to explain you in detail. What are the basic conditions? What are the additional conditions? So two basic conditions are there, two additional conditions are there. So this special category persons, to this special category persons, only first basic condition will apply. The second basic condition will not apply. That's all. So this is the end in this video. In this video, I have explained you regarding the exceptions to the general rule. That means when a person's income is taxable in the same year in which he has earned. Previous year he has earned the income, previous year itself he has to pay the tax. That means he has not to pay the tax in assessment year. Normally in assessment year it will be paid, but exceptions it will be paid in the same previous year. Next, we have discussed about the incomes exempted from tax. A list of incomes are there which are exempted from tax. Next, lastly, residential status. This residential status is very, very important. So in first time itself, you may not be able to understand. Rewind the video, watch again from beginning, again 2-3 times. If you watch the video, definitely you will get a good command. Remember, interesting, normally students will feel that income tax is a tough subject. No, if you take the interest, it's an interesting subject, I can say, because so many provisions are there. You must enjoy while learning the provisions, then only. Otherwise, if you make it a panic in your mind that it's a difficult subject, nobody can help. You are yourself to be blamed. So take the interest. Take the interest in this provisions of Income Tax Act. Definitely you can be able to enjoy the problems, you can be able to face the interviews, you can be able to write the examination well, you will get a lot of confidence. So if you are satisfied with my lecture, give a like to the video, share it in your friend circle group, and give your comments, feedback regarding these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. I'll continue the introduction, this residential status, in the next video.